Hey everybody, Scott Riley, the Market Update Desk, June 26th. We are back in the Cabana office enjoying the day. We're happy that the office survived the windstorm quite well. Today, we had a little bit of a retreat in the market. 10-year bonds are being pressured to the upside. Main reason for that is the Australian inflation data came out, and that came out a little higher than expected, so that has put pressure on our bond market. Today, we had another Fed member speak. We had Lisa Cook today, and she's a voting member. She's a governor. She is in favor of a cut, and specifically for a few different reasons. Indicated that there's significant inflation progress, especially from where we were 12 months ago, and then expects a favorable month-to-month improvement. Now, we're not talking sizable. We're talking a tenth, 2/10, 3/10. That gives us a clear path forward to consistent improved inflation. So we will see moderate improvement on the year-over-year numbers and month-over-month. Specifically, she called out the cooling labor market. I think she's actually going in depth to the numbers and understanding that the headline BLS number and the household survey number are in complete opposites. And what we're seeing as advertised in the media is not reality. We're seeing less a less favorable job market than we've seen in the past. So coming out indicating that the risk to holding the tight restrictive policy, it could cause a recession. So she wants to see the continued opportunity to have a soft landing, which in her eyes and many others are starting a rate cut path. Looking at maybe September, and the risk of not doing it outweighs the risk of keeping the restrictive policy. In fact, with the jobs numbers, she's indicating that there are more and more workers entering the economy. Not getting into a political thing, but there's significantly more um, employees entering the market, and that the monthly job gains need to be plus 100,000 a month of what we're seeing to keep up with those increased job seekers each and every month. Now, this comes out and matches a lot of what Governor Mary Daley talked about yesterday in her speech. So those two Fed members are pretty clear in their decision and logic of why there needs to be the movement forward to rate cuts, and understanding that the job numbers are a fallacy and they're not real. Complete in contradiction to Fed President Michelle Bowman, who, as we've talked about consistently, is a very big hawk on the Fed Reserve, and that she's not looking at the real numbers. She's looking at headline numbers. Talking in her speech, she talked about the strength of the labor market. These are things that just don't add up. In fact, when we break down jobs data, let's take a look at this here. So the BLS in 2023, the overstatement of jobs for the year was 360,000. So the monthly average revisions downward was 30,000 a month in revisions. Now, this is proven evident within the QCEW report. The quarterly census on earnings and wages showed that the BLS overstated jobs by 770,000 or 64,000 a month. So the total overstatement of jobs by the BLS last year was 1.3 million, or 94,000 jobs a month. And in 2024, year to date, that overstatement is 43,000 jobs a month. These are powerful things. So in 2023, how would this have looked on the economic numbers? One in every four jobs that the BLS said were created never existed. They were thin air. They never happened. This is the power of the misstatements of what's going on out there. As we're looking at other things today, we have new home sales, which showed a very strange drop of 12.2% last month. Diane Olick from CNBC was all over this, saying, look at the drop. New builders have too much supply, and talking about that. What she didn't pay enough emphasis on was the revision upwards from the previous month of 60,000 new homes. So if we take into account the revisions upward and the decrease in sales, it was a net decrease of about 2.2%. When you break the numbers down further, It's a very big oddity within the quadrant of the Northeast. They showed a big aberration in sales. In fact, if you see that, if you took out that aberration, that accounts for almost all of the decreased sales nationally. So we're suspecting that we're going to get a revision upwards next month to compensate for the oddity within the quadrant of the Northeast. Mortgage applications for purchases, week over week, they were up 1%. For refinances, they were flat. Keep in mind, refinances still consist of 26% of the market. Very important to understand the benefits there. When we look at what's coming up later today, we got a 5-year bond auction very shortly here today. Then tomorrow we have jobless claims, GDP, durable goods orders. Very big day tomorrow. And we've got a 10-year bond auction tomorrow. Yesterday's 2-year bond auction, $60 billion bond auction, the biggest ever 2-year bond, actually graded out a B+. It was very well received. In fact, the bid to offer ratio was 2.74. What does that mean? There were 2.7 more bids than offerings of bonds. It means there's more demand than supply. Great sign of potentially what's to come. That's a breakdown of what's happening today. Tomorrow, like we said, it's a very busy day. Look forward to getting you that information and data. Keep watching us, the Market Update Desk, your original singular market news source for the West Michigan area. Give us a call to help you get pre-approved on homes. 616-293-2189. Have a great afternoon.